In this video, I'm going to show you how gold just might reach the $3,000 threshold again and possibly even eclipse that. Now, this is just a technical projection. This is not meant to be construed as a trading signal or trading advice. This video is for entertainment and educational purposes only. Now, in true Harmonic Trading Club fashion, we need to get what is currently activated and out the way first. But before we do that, can you please pause for a second and hit the like button so the algorithm can let the audience know that another banger just been released and to send it out to the people? Because I'm pretty sure there are a lot of traders out there that this could help. And last but not least, could you please subscribe to the channel and turn on the notifications so you're notified as soon as these videos are released. And with that being said, I really appreciate your support as I do everything that I can to provide as much value as I can to the community. All right, so all that housekeeping stuff out the way, let's tackle what's on the table first. And I'm going to kind of skip or cut to the chase. There's an advanced bearish butterfly on the table. And before we start talking about this whole 3,000 and beyond projection, we got to take care of him first because he's absolutely going to have something to say about this. So very quickly, I am going to take the opportunity here to do a very quick training on the butterfly pattern because you see it's right here in front of you. And if you want to know more about the advanced butterfly pattern, I do have this class in the Harmonic Trading Academy playlist. Okay, just look for the how to identify and trade the advanced butterfly pattern. But there's one here, and like I said, he's got something to say. So I just want to run through his rules of engagement real quick. I'm looking at this area here. This was the 2955 area that he violated and of course broke and closed up out of. But let's talk about what happened to get here and what should happen after, and then we'll get to all the other good stuff. There's a lot of amazing stuff going on here, but again, just validating this, going across the rules of engagement, checking this would be X. Hopefully you guys have been following along. Of course, I'm primarily a pattern trader. I do all kind of sorts of different styles and techniques, but advanced pattern recognition, hey, APR is king. So, and you'll see why here. But just looking right here, as I've identified that impulse that's making up what I believe is an advanced butterfly pattern. So if I come, I don't know why that did that, really. Okay, sorry about that. Let me back up. My Fibonacci retracement got stuck. So starting from the beginning of the impulse, which will be X, and then that swing high to this swing low, and then just measuring just to see how far that retracement is. And I'm just going to bring on the 786. That's what's needed for this guy right here. So this high to this low, this is X, this is A, just wicks up and touches the 786. I know this is B. I know that C is good. I'm only interested in D. Did the butterfly pattern fail? I see the reaction here. We'll talk about it once we put them all together. But that's going to be a 127 inversion of A to X. Okay, so I'm using the Fibonacci extension tool, and I'm going from A to X, and I'm coming down. And so you can see the 127 hit and fill, okay? And like these things do, of course, we got the reaction from it. That's why you see the bearish candles come into play, because you're getting a reaction off the butterfly. So putting his body on there, this is what has taken place, and it's actually live. For traders who had been looking for an opportunity to short gold, not the smartest thing to do in my opinion, but the opportunity is definitely there with something as powerful as the butterfly pattern completing and filling. So that's bringing this corrective action. Basically, that's what's happening. Let me remove the 786 fib. So that's what you're seeing right here. And then also, if you look on the RSI, you see it's overbought, okay, meaning above 80. Now, we're not going to see a lot of divergence here. It looks kind of flat on the 4-hour chart. But if I jump out to the day when this all took place, you'll see that there's a lot of divergence in there. So I just want to do that, you know, so you can just understand how we're dealing with this from a combined technical scoring perspective, right? So we can see, because we want to see that divergence where it looked like price action was going up, but RSI said, nah, this thing is slowing down. This thing is slowing down, right? So that's the divergence. You want to see this react like that, okay? The next thing that I'm going to talk about, so now we're actually going to, this video is really that quick. I'm just kidding. There's a lot more to go. But this right here, the big guy, the big green guy, that's a bullish engulfing candle, okay? very, very powerful. It basically signifies that there's so many buyers in here that this thing is not ready to turn over yet. So you will or should, in technical theory, get a reaction off the butterfly, but it's going to be more of just a placeholder this time. Okay, so you won't get like, normally you kind of get like a 382 retracement or a 618. This one is just going to be like a placeholder. So what I mean by the correction, the level of the correction, because that's going to come into play, and I'm going to talk about all that. But measuring from A to basically D, or to the high up here where the wick stops at, okay, so the highest high, from the low to the highest high, we would have been looking for 382 and 618. Typically, those are the two targets we would be looking at. 382 right here and 618 right here. But this is not going to be the case where you get like that deep 618. So now I think that we're ready to go talk about that. So we should expect this correction. The good thing about this correction is it does take us back near the structure that it broke and violated. We want this to become support. And if that does indeed become support, even though it's probably going to dip down and give us at least a 382. But let's say it only gave a little bit. Let's say this, which was resistance, and it comes back, and then that's the support. So I'm not going to even concern myself with the 382. I'm not going to even suggest, because I see the structure right here. Could this dip down and play a little bit more into it? Possibly. Okay, but we're going to just say we're going to be in that area on the correction. So that's going to be okay. And that's going to be good for traders who wanted to short this thing. But back to this bullish engulfing candle here. So I want to go back through the history of this and show you what happened, so I can tie everything together when we're talking about its correction, and then how we end up going way, way up here. Okay, I'm going to talk about, remember, this is the up into the 3000s and maintaining that and keeping that. So I've already went and pulled, I have the charts in parallel. So one is the current, one is the where I went back into the history of it. And let's look at that bullish engulfing candle so we can see what happens, so you can understand where I'm coming from. So there's one right here, right? You see this big bullish engulfing candle, right? And that's, like I said, that signifies that more buyers are present. And if you just look without me even, before I even talk about what happened, you can just see how this thing just continued after a little bit of pullback, right? Remember, that's the same thing we're talking about here, just a slight pullback. So when you get that bullish engulfing candle, okay, just a slight correction, then he's off to the races. Then he went sideways and he kept going, right? Now, remember, I suggested that was 38.2% or less. So let me just show you what that would look like using this part of its own history as an example. If I grab the Fibonacci retracement tool and I go wick to wick, swing low to swing high, okay, and I have the 382 on there, you see his wicks didn't even hit the 382, but they came down. So this is what I'm trying to show you on the other chart. This is what this example here, and how he continued to rally, is what I'm trying to show you here. Expect using the butterfly pattern to cause that, okay, completing this butterfly pattern to cause a push down and take us down near the 382, but I don't even know if it's going to go that far. I'm looking at this structure here. Remember, always look left, structure leaves clues. And then if that is the case, you'll get that rally. You'll get that off to the races rally. So let me go back to the history. I hope that made sense to you guys. Did you guys understand that? Basically, the trigger bar, the trigger in all of this, the culprit in all of this is this bullish engulfing pattern. Even on the daily chart, it's even worse, right? So that's the thing that's infused with all the buyers. I don't even need to go get the volume indicator on this. You can see this is the volume indicator here. But again, going back through history, because I want to show you guys a couple of examples, and then we'll go back over and put the projection on. So this is going to be a lot easier than I thought it was, and a shorter video than I thought it was, because, hey, APR is king. So we got to start off with the APR and then kind of go through the history to see. So here's another example of that engulfing candle, bullish engulfing candle, but this time the correction is a little bit deeper, right? This one is a little bit deeper, so this doesn't have the 382. But that's why on the current time frame, I had to suggest that maybe we could get a little bit deeper. But the structure is right here. I'm really not sure. But on the historical, even this one right here is good. So this looks like also, it's not the 382, is a little bit deeper, but it is still one of the major Fibonacci levels. In this case, I'm going to bring on 618 and 786. In this case, right? Perfect. So this one, the reason that this one reacted is because it is right in the middle of two major levels, the 618 and the 786. Okay. And then, of course, being sprung off of that bullish engulfing candle with a little bit of a correction, which is okay. People have to understand that you get that type of reaction. Okay. Now, I don't want to be that extreme when I go back over there to finish up the rest of the projection on the current time frame, but you kind of get the gist. So here's a couple more. And this time I actually plotted out some of the prices for you to show you, because I'm going to be talking about that when I go back over there. But when you end with this bullish engulfing candle right here, that's at 1246. Okay. And you see, this is all the same move, by the way. This is all the same move. This is all the same move. Don't worry about it. That's all the same move. Okay. But you see more than $100 on that move from 1246 to 1366. What is that? $120 built off of that bullish engulfing candle. Or if I were to just stay where we are right here and look at this bullish engulfing candle, another one. So how many examples have I given you guys already? Okay, to show you. So I was able to switch from the advanced pattern recognition to talk about something I hardly ever talk about. And that's basically, they call this an elephant candle. Okay, let's call it the elephant candle because it's that big. It's way bigger than the rest, and it makes a lot of noise. I guess not really, but bullish engulfing candle. And then off to the races. So closing that candle at 1315 and then closing at the top of it at 1366. So about a $50 move just based off that there, even though all of this was spraying off of that right there. Any more? Did I pull out any more? I think I pulled out one more, and then we'll go finish up the projection. You guys enjoying this? Did any of this make sense to you guys? Am I moving too fast? Okay, so let's just bring this thing home one more time, right? One more time. Okay, so at least maybe you were able to learn something else that you hadn't seen me talk about before. Remember, it's all about a trained reticular. It's about seeing and identifying these things. So bullish engulfing candle. Okay, little bit of a correction. Now, in that case, this one might be 382. So I'm going to go from the low here, from the low right side. When you don't never start from here, you start from the right side of a shoulder like that. So from right here all the way to this right here. And what is our correction on this? What is our correction in between 382 and 50? We can probably guess that because we're so good and so sharp with Fibonacci, because you guys have been taking those Fibonacci classes and you're loving them. So this is right in between 382 and 50, right? So let's just go ahead and mark that off, okay? And you see what happened. Bullish engulf, little bit of a correction, off to the races. 1346 to 1418. Is that about 80 bucks or something like that? So we're looking at a $80 to $120 range. Now let's go back over here to where we were. I'm going to drop back down to the 4-hour chart so we can do something real quick. And then we're going to tie this bad boy up. So I already have the fibs lined up already because I already ran an extension. Okay, the same way. Well, I didn't run extensions on the other one, but I ran an extension from the low here, the C leg, to the D leg. Okay. And if you need more help in understanding why I'm doing that, I released a video called Mastering Fibonacci earlier, and it's in the playlist. It's in the Harmonic Trading Academy playlist. But the extension of C to D right here, okay? Let me just do that again to make sure so I don't screw up our projection. I'm going to clean up a little bit. Things are getting a little too crowded. I like to keep a clean chart. I don't know if you guys have noticed that. I like people to be able to see, and I don't need our line of structure anymore, and I don't need our fibs here anymore, because we already know that we're expecting, you know, a correction, maybe back as far as here, structure. Let's say structure. Let's give it almost a 382, but extension from C to the wick, right? Grab the extension from C to the wick right there and come back, right? That's going to show us the three possibilities. 3,039 being the first price, 3,057, and 3,083. Now, 284 to 383 is $100. That fits right inside that $88 to $120 range. It's $100 on the dot that's on the table if we're going to bring this home in true A to B is equal to CD fashion. If from the low to the high, if that's a 382 retracement right there, and if A to B is equal to C and D, and this is A and B, the new A and B being set up, and we clone that, and if we get the correction that we're suggesting, if we get just a slight correction like we used in the other examples and put them right here, he's going to drop us off right here at $372, somewhere in this range. Okay, so that's how and why gold should reach 3,000 again, and way up there in the 370s, 380s, maybe even higher, should stay around that range. Not to mention that now there's no resistance up there to stop it, but maybe another pattern might form, maybe, because this will be D. Once this is done, this will be D, which means yes, another pattern was completed, an A to B is equal to CD pattern, which this butterfly was built off A to B is equal to CD principle. So once this pattern it won't be another harmonic pattern, it'll be this one if anything. Once this is complete, you'll see a fallback, and now this, which was resistance and got a correction off of, will become support. And then it'll basically be rinse and repeat. I don't want to go too far with it, but I think you guys kind of get what I'm saying. It's going to take us into the 3100s. Okay, so everything stemming from this butterfly pattern to get the correction, knowing that when we have these elephant bars, we get a very, very slight correction somewhere in between 382 and 618. And then you get your support, and then you keep going up and up and up, as I showed you on the rest of these. Come down, boom, slight retracement, go up, right? Over and over and over again. So I think that's pretty much all we have on this. If people were wondering what they can expect from gold, you have it. Expect a slight correction, a retracement over the next this whole entire week coming up here. That should be 3 or 4 days of this correction. So going into next week, that's when we'll probably be down in this area here, and then looking for price action to go off and do its thing to go retest the 3,000 again. Remember, he has to retest 3,000, which is this wick first. Okay, and then after that, breakthrough, and then once he breaks through after that, he'll probably just fire off on another engulfing candle just to hurry up and get himself where he wants to be. But in my technical opinion, that's what you can expect from gold. I hope this brought some value to you. I hope you enjoyed it. Again, give me a like, subscribe to the channel, and turn your notifications on. And I'll see you guys on the next video. We're out.